Ladies and gentlemen, good day and welcome to Lloyds Metal and Energy Limited Q1 FY'25 earnings conference call hosted by JM Financial. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing the star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Ashutosh Somani. Thank you and over to you, sir.
Yes, thanks operator and welcome everyone to the call. I will first thank Lloyds Metals and Energy for giving JM Financial the opportunity to host today's call. Without much ado, I'll hand over the call to Mr. Rajesh Gupta, MD, Lloyds Metals and Energy. Over to you, sir.
Good afternoon, everybody. Greetings to all the investors present on the Concall. And a very special thanks to Ashutosh and the JM Financial team for hosting this call. The quarterly results of our company were very satisfying and robust, and the growth story continues, both in terms of operational and financial performance. We reported our best ever quarterly iron ore production, as well as best ever quarterly DRI production. This was matched by highest ever quarterly revenue, as well as quarterly profit. This quarter, the highlight also was the fundraising, where we raised nearly $500 million over two issues, the QIP issue as well as the preference issue. The preference issue is still ongoing and should get completed very shortly. And this fundraise will ensure that our capex program remains undisrupted through the cycle that we have planned over the next 3-4 years. On the capex front, the projects are executing and were executed and progressing as expected, or maybe even better. The slurry pipeline is nearly over and testing is about to begin in the next 20-30 days as soon as the rains subside a little bit. The pellet plant is well on track. And the DRI doubling capacity is also on schedule in Chandrapur. Regarding the market scenario, the iron ore market in demand in India remains buoyant, pricing being volatile seasonally. The structural demand of steel, therefore iron ore, therefore the metal space is very strong, and we remain in a firm position as we speak. That's it from my side, and I would now like to hand over to our CFO, Mr. Riyaz Sheikh, who will go into more details of the performance of the company. Thank you. Over to you, Riyaz.
Thank you, Rajesh. Good afternoon, everyone. Thank you for joining us today. I am delighted to share with you our highest ever quarterly performance, both operationally and financially for Q1 FY'25. Our revenue of rupees 2,423 crores for Q1 FY'25 saw a remarkable 23% year-over-year increase, driven by higher sponge iron and iron ore volumes. Notably, Q1 FY'25 iron ore volumes were the highest ever recorded in the single quarter for the company. On the realization front, we witnessed encouraging year-over-year growth. Sponge iron too recorded significant volume increase, the highest ever, both year-over-year and quarter-over-quarter. Our EBITDA performance mirrored our revenue growth with a substantial 32% year-over-year increase in the Q1 FY'25. This robust performance was primarily led by our iron ore and sponge iron segment, supported by higher margins. During FY'24, we incurred a capital expenditure of INR 1,690 crores, and in Q1 FY'25 alone, we have invested rupees 598 crores. These investments reflect our commitment to sustainable growth and operational efficiency. Let me provide some key highlights. Iron ore production for Q1 FY'25 stood at 4 million tons. Dispatches were at 3.6 million tons. Realization for Q1 FY'25 was INR 5,710 on average, a 7% year-over-year growth. EBITDA per ton for Q1 FY'25 was INR 1,848, up 23% year-over-year. DRI and power. The DRI segment reported a Q1 FY'25 production of 76,704 tons, a 16% year-over-year increase. Realization for the DRI segment remained marginally muted year-over-year. The power segment reported a steady performance with a 5% year-over-year increase in the sales for Q1 FY'25. I want to extend my gratitude to the entire Lloyds Metals team for their hard work and dedication, which has enabled us to achieve these exceptional results. We remain focused on delivering sustained growth and value for our shareholders. Thank you for your continued support. We look forward to discussing our performance in more detail during this call. Thank you. Abhishek? Ashutosh?
Yeah, Steve, you can open the floor for question and answers.
Okay. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Participants who would like to ask a question to the management may press star and 1. The first question is from the line of Parthiv from Anand Rathi. Please go ahead.
Hi, sir. Am I audible?
Good afternoon.
Yeah, hi. Good afternoon, sir. Am I audible?
Yes, go ahead.
Yeah. So just wanted to know the status of the increase in this mining capacity, which you are planning to take it from the current 10 million ton. What is the status on that, sir? And what is the timeline when the new production would come on stream? And if you can throw some light on what kind of numbers are you looking once these mines are up and running, as far as your EBITDA numbers are concerned.
The mining capacity enhancement has 3 steps. One is the 2 steps to the approval process. One is the IBM approval for the mining plan, since it's a very major size expansion, and that process is over, and we got the IBM plan approved by them. The EC clearance is the next step. We are under process for that and should be in line by, I would say, January or so. Regarding the production process itself, we are enhancing our, as we speak, the MD is enhancing his grinding capacity and equipment, screening grinding capacity as well as the mobile equipment. Also electrifying most of the new equipment, so that as soon as we get the approvals, we should be up and running with the total capacity. Like you saw, we have done 4 million tons in this quarter. So if you extrapolate it, it comes to 16 million tons. By the time the approvals come, we should be up and running with the requisite monthly capacity. And then pro rata we will be able to do as required for the year.
So, sir, is my understanding correct that if all the approvals come in, say by mid to end of January, then it will only be 2 months of the new capacity on stream? So yeah. Last year you have already done like 10 million tons. On a pro rata, it will be.
By that time we should have achieved 10 million tons, and so the next 2 months will be around 20% of around another 5-6 million tons is what we hope to do. But that's obviously not given. It depends on so many other factors, primarily being the final approval coming in.
Okay. And sir, we even have this new approval is between the iron ore, I believe it's between iron ore and the BHP, right? So what will be the mix of that going forward between iron ore and the BHP?
Mining approval is for producing X quantity of mine, 55 million tons is what approval we will get, and we will limit our mining to 25 million tons in the first year only iron ore, dispatch of only 55 million tons of iron ore, 25 million tons of iron ore in the first full year, and subsequently as we speak, the beneficiation plant, putting up that process is going on, including environment approvals and land acquisition and all that. So once that, and of course the engineering, the the pilot plant, all that of beneficiation also ready. So every year we will add one module of the beneficiation plant of input of 15 million tons and output of 5 million tons, capping the total output at 25 million tons over the life of the mine.
Okay. Got it, sir. And what about the steel facility which you're planning to put in, or say by FY'26-27? What is the progress on that, sir?
Like I clarified earlier, in 24-25, we should be up and running with the pellet plant, the first pellet plant and the slurry pipeline to go with it, as well as to double our DRI capacity to 700,000 tons. And the pellet plant would be 4 million tons. That should be up and running by the end of this financial year. Next financial year, we would 25-26, we would be able to. We hope to start the second pellet plant of another 4 million tons, and the 1.2 million ton steel plant would be June to September of 26.
Okay, sir. So just one last question. Sir, just considering, your pellet plant will be coming up in phases in FY'25 and 26. What is the kind of delta you are expecting from these plants? If it's possible to quantify the numbers.
Given the quality of the iron ore as well as the pipeline that would be in place by that time, along with the pellet plant, we expect the delta to the EBITDA delta to be around 1,200 to 1,500 rupees.
Okay. Thank you so much for your answer, sir. Thank you so much.
Thank you. The next question is from the line of Siddharth Gerekar from Equirus Capital. Please go ahead.
Hi, sir. Good evening. So my first question is on the realizations. If I look at the steel mint prices, our prices remain similar to the last quarter, but we have seen a sharp drop in realizations of around 500 rupees on the iron ore side. What explains the drop in realization?
From last quarter to this quarter?
Yes.
From Q4 to Q1, the realization difference would be primarily because our lump production was maximum last quarter. Being the end of the year, we were focusing on extracting the maximum lump. And this year, it has been a normal mix of around 18-20% lump and balances fines. So that is why the drop is there. The price per lump per fines has gone up by around 600 rupees quarter on quarter. Price has come down in the Q1 by 560 rupees in fines, plus the factor of this lump lesser.
Okay. So secondly, in terms of our BHQ facility, we were supposed to do some trials in April to June. Have we got any results on that?
Pilot. So the pilot plant has been commissioned and the results are as expected. It's around 65-66% Fe we are getting. On a consistent basis, 67 we have reached, and the yield of that material is around 38 to 40%.
So our first beneficiation plant should come online by FY'27. Is that understanding correct?
Yeah.
So thirdly, in terms of our capex for the next two, how should we look at the capex numbers?
Yes.
Yeah. Tell me.
The capex numbers.
We have in this year we have first quarter we've done around 598 crore rupees. We should be what we have planned with all these projects to be completing. We should be doing 2,700 crore rupees more in this the next 9 months. So that should be taking it at around 3,300 crores rupees in this year, and around 6,500 to 7,000 crores in the next year for the capex.
And lastly, on the CSR expenses, have we front-loaded the entire CSR expenses this quarter?
Last year, the CSR expenses for the whole year was around 65 crore rupees. This year, the first quarter itself has seen a big jump because we have completed our schools, started a new school, completed one school, completed the garment factories and many other things. So we've done around 68 crores in the very first quarter of CSR expenses.
So how should we
The capital nature of the CSR has been completed. 2 schools, 1 hospital and 1 garment factory. These are the big ticket items which have been completed, and this will help the community at large over the next 50 years, obviously.
So how should we look at the CSR expenses for the entire year then, going ahead?
It will be now going back to the 7-8 crore rupees per quarter.
Okay, got it. That's from my side. Thank you.
Thank you. The next question is from the line of Amoy Karve from an individual investor. Please go ahead.
Congratulations on the good set of number. I just have one question, sir. Can the company, maintain the debt-free status even after doing the 33,000 crore capex?
Yes. As you might be aware, we've just done a fundraise also of a QIP of 1,200 crore rupees, and we are also in the process of doing a preferential warrants issue, which is around 2,960 crores. So that would be taking care of that would be around 4,200 crore rupees of debt of fundraising through via equity. This is what we had planned. We would all our projects what we have planned, we intend to remain debt free. The whole company intends to remain debt free for all the projects. This fundraise will be used for any shortfalls, if any, it would be used in for the projects.
Okay. Thank you, sir. That's from my end. Thank you.
Thank you. Before we take the next question, we would like to remind participants that you may press star and 1 to ask a question. The next question is from the line of Nikunj Lahoti, an individual investor. Please go ahead.
Sir, the company has a mine in Surjagarh. Does company have more mines or wish to plan to bid for new mines?
As of now, there have been no such opportunities where we have been very excited.
And sir, how much is freight cost per ton for iron?
Freight cost up to our siding is around 1,100 rupees a ton. Our total freight cost is 1,600 rupees because much of our material we are transporting up to the gate of the customers. So the average freight cost has been around 1,600 rupees a ton.
And sir, how much after starting of slurry pipeline, how much do you expect to get it lower?
On an average, I would say around 800-900 rupees a ton would be reduced.
Okay. Thank you, sir.
Thank you. The next question is from the line of Rajesh Majumdar from B&K Securities. Please go ahead.
Yeah, sir. Thank you so much for the opportunity. As my first time in this call, so I just want to know some broad answers from you. As to this new mines that we have post-expansion, what is the royalty on these new mines? And do you apprehend any increase in the royalty structure given the fact that the government, the court has recently allowed that states can charge extra royalty on mining? That was my first question.
I couldn't understand the first part of the question.
I'm saying that given the fact, I want to know the current royalty status on the expansion of the iron ore mines, and the second part you already know the question. Yeah.
So the royalty would continue to remain the same, around 19.8% of the average sales price,
Including DMT.
Which include DMT and NMET. The current court case, which is still being studied, it's a 300-page document. We're still studying it, but prima facie, it's not that additional royalty will or can be charged. It's prima facie saying that royalty is not a tax and the state can charge taxes. So that's the broad basis of the case. The exact implication and effect of that on the total iron ore industry and the steel industry is yet to be understood and studied by everybody.
And sir, I wanted to know who are our main customers in iron ore?
We have around a book of 25 to 35 customers quarterly. We have customers ranging from JSW, JSPL, All the Chandrapur customers which are smaller in number in each quantity, Gopani, Chaman, etc., but they buy all our lump product. We are selling to Bajrang, we are selling to Sunflag. So very wide ranging customer. I think the largest customer is around 15-18%, 20% of our product range.
Will that be JSW?
Yeah, that is JSW.
Okay. Yeah. And so, I wanted to know your outlook on the domestic prices, the discount that prevails over the iron ore imported landed cost. Do you foresee any change happening there, given the fact that a large amount of mining capacity is coming in India?
So, the international pricing, even at this depressed rate, is around $100 per ton of 62%. Indian prices are much, much lower, always have been. Number one. Number two, so there's no link to that, actually speaking. And in terms of mining capacity being added, there's also steel capacity being added, like we all know. The Prime Minister's program is to produce 300 million tons of steel by 2030. For that, we require around 300 million tons more of iron ore, which is nearly doubling the capacity, just like of steel. And that capacity we do not see on the anvil right now.
Okay. And so my last question, if I could hazard one more question, is that the beneficiation plant is, going to be using the iron ore that we are mining. So the total capacity of our iron ore mines post expansion is 25 million tons, out of which and beneficiation is 45 million tons. So basically 20 million tons is additional beneficiation capacity. Is that correct?
So the output of the beneficiation will be 15 million tons and 45 million tons will be the input and 15 million tons will be the output and of the beneficiation plant, and 10 million tons will be direct sales source. So 10 plus 15 will be 25 million tons ultimately over 3 to 4 years.
Okay, so 10 million direct sales at the current pricing and 15 million is pellets.
Yes. The beneficiated ore would be producing 66-67%, which is much richer ore, very low in alumina and in phos. So we should be getting a good, if we use it internally, it will be good premium in production costs. If we sell it, it will be good premium in selling price.
Thanks so much, sir. Thank you.
Thank you. Participants, if you wish to ask a question, you may press star and 1. The next question is from the line of Giriraj Dagga from Visaria Family Trust. Please go ahead.
Yeah, hello Tim. So my first question is regarding the prices. So let's say last month NMDC has cut prices. So what are the realization for July compared to average of 1Q?
The price realization in Q1 has been around 5,700 rupees, partly delivered to the customer, partly delivered to the siding. Yeah. And the average realization this month would be a little lesser than that. We have reduced the prices once. So we don't know how exactly the quarter will play out given the scenario.
But is it something like 300-400 rupees what NMDC also cut? That was similar?
Yeah, would be similar.
And assuming let's say there's an expectation of another cut coming from the 1st August onwards, so are we also anticipating similar like 300-400 rupees?
At the moment we are well booked till nearly end of August, so we don't know, but nobody can predict the prices of commodities like you very well know, sir.
No, because also understand, let's say we are booked on quantity, so we will not be, let's say, reducing the prices even if NMDC reduces, or the customer will ask us to reduce the prices for
We are not under pressure to market the product right now because of the monsoons. Even like, NMDC has had problems in the monsoons, even we are having problems in the monsoons of delivery. So with all of that, the pressure of the sales is not there, so we would not be looking at a price cut immediately.
Okay. Second, what is the specific beneficiation capex for the 45 million ton?
Around 5,000 crore rupees for all the three units.
Okay. And lastly, on a full year number, like last quarter you mentioned about 12 to 13 million ton of number, depending on the approval. So how confident are you for this number now, as of now?
There are many external factors, primarily being the EC approval. Last time we got the EC approval after the IBM approval, we got it within 5 to 6 months. We got the EC approval last month, so fairly got.
IBM approval.
IBM approval. I meant to say, let me correct myself. Last time we got the EC approval after IBM after 5 to 6 months. This time we got the IBM approval in the month of early July or maybe end June. So from that angle, January seems to be a possible thing.
Okay, sure. Thank you.
Thank you. The next question is from the line of Amui Garve, an individual investor. Please go ahead.
Is there any guidance that you
Sorry to interrupt, sir. Your voice is not proper. Could you come closer to the mic and speak?
Hello? Yeah.
Yes, please go on.
I just want to ask if guidance that...
Sorry, sir. The voice is not clear. Could you please fall back in the queue again? The next question is from the line of Ajay Lohati, an individual investor. Please go ahead.
Yes, sir. Jai Shri Ram.
Jai Shri Ram.
सर जी, जैसे हमारे एक बार रिपोर्ट पढ़ी थी हमने वेंचुरा की कि आपके पास में 2 और माइंस है. क्या सर इसके बारे में आपका क्या कहोगे आप?
नहीं सर, we have no other mines other than the one that we are operating right now.
तो वेंचुरा वाले की रिपोर्ट सही नहीं है फिर?
वेंचुरा की रिपोर्ट आई डोंट थिंक कुछ गलती बात है जी, कोई पढ़ने में कुछ या समझने में कुछ गलती है. लेट मी करेक्ट दैट इफ देयर इज अ मिसअंडरस्टैंडिंग. आज के दिन हमारे पास एक ही माइन हम ऑपरेट कर रहे हैं.
तो सर जैसे मेरा विजन है 10 साल का मतलब इन्वेस्ट करने का, तो फिर अपने पास 10 साल के बाद में फिर अपना क्या बिजनेस रहेगा जैसे इसके अंदर?
तो मेरी ये जो माइन 2057 तक वैलिडिटी है. रिजर्व्स आर अराउंड 900 मिलियन टन, मे बी लेट्स से राउंड ऑफ 800-900 मिलियन टन की रिजर्व्स है और साल में 25 मिलियन टन माइन करनी है. तो आई थिंक 2057 तक का हमारा प्लान है कि हम ये माइन करेंगे. ऑफकोर्स वी लुक एट अदर अपॉर्चुनिटीज. प्लस हम स्टील बनाएंगे, 4.2 मिलियन टन स्टील बनाएंगे, पैलेट बनाएंगे और ये आयरन ओर को निकाल के इंडियन मार्केट में बेचेंगे. दैट इज द लॉन्ग टर्म विजन. एंड माइन की वैलिडिटी है 2057. रिजर्व भी जब तक के हैं हमारे पास.
ओके. थैंक यू सर.
Thank you. The next question is from the line of Harshil, an individual investor. Please go ahead.
Yeah. Good afternoon, sir.
Good afternoon.
Hello. Yeah.
Good afternoon.
Yeah, I have one question. Like, what will be the capex spend for financial year 2025 and 26? And are we are we doing through internal accruals or are we taking any debt to fund it?
No, we are not taking any debt. That is very clear what we've always been mentioning. The capex plans for the 2 years is in the year 24-25, we are looking at around 30,300 crore rupees of capex. And in the year 25-26, we are looking around 6,500 to 7,000 crore rupees of capex. As I have earlier also mentioned, we have just done a fundraise of QIP as well as a preferential warrant is under process. So we plan to do all these projects through internal accruals. Any shortfall or any issues would be supported with this fundraise of QIP as well as the preferential issues.
Okay, sir. Thank you.
Thank you. The next question is from the line of Prince Chaudhary from Pink Wealth. Please go ahead.
Hello.
Hello, Mr. Prince.
Am I audible?
Yes, sir.
I have a question. Like, out of the total capacity of 25 million ton per annum for iron ore and 45 million ton after the post expansion, how much do we use for the captive consumption and how much is sold to the customers?
Post expansion, post all the total expansion plan, we'll be selling around 4.2 million tons of steel, 6 million tons of pellets, and 9 million tons of iron ore. So, out of 25 million tons of iron ore that we mine, this would be the end product sale that we will be doing. 4.2 million tons of steel, 6 million tons of pellets, and 9 million tons of iron ore.
So that iron ore which we will mine about 25 million tons, that will used for the captive purpose?
Yeah, 4.2 will consume around 8 million tons. 15 million tons will be, 9 million will be sold as iron ore. 6 million ton will be converted from iron ore to pellet, and around 8 million ton will be converted from iron ore into steel.
Okay.
So that gives the 25 million ton overall picture.
Okay. And sorry, I've entered late in Concall. How much freight cost will we save using the slurry pipeline?
Could you repeat that?
Freight cost will save using the slurry pipeline?
800 to 900 rupees is what we'll be saving on the slurry pipeline transport cost.
Okay. Thank you. Yeah, that's it from my side.
Thank you. The next question is from the line of Vansh Chen, an individual investor. Please go ahead.
Hi, good evening, sir. So, given that the company is moving towards forward integration and will be producing value-added steel products, what is the management's projection for EBITDA margins?
After steel production, I think it's too forward-looking for us to respond on this Concall at this point of time.
Okay. Thank you, sir.
Thank you. The next question is from the line of Amui Gavre, an individual investor.
Can I expand on that answer that the gentleman just asked me?
Yeah, sure, sir.
So, compared to my competitors in the steel business, we would be lower on the iron ore cost because we have no premiums. We will be lower on the iron ore cost because we have a good pipeline network would be set up. So, these two savings are around 4,000 rupees a ton of iron ore, and that translates to around 8,000 rupees a ton of steel. So, this is definitely where our delta would be for the life of the mine.
Yes, sir. Should we move on to the next question?
Yeah, please.
Yes, it's from the line of Amui Gavre, an individual investor. Please go ahead.
I just have this question, sir. What will be the timeline guidance regarding to the 30 million ton iron ore approval?
I just answered that. I think January 2025 we should be up and running, subject to the EC approval being received.
Okay. And add to that, is there any volume guidance that you would like to provide for iron ore for the next financial year?
We would be capping our iron ore production at 25 million tons.
Okay. That's it from my side. Thank you, sir.
Thank you. Participants who wish to ask a question may press star and 1. Ladies and gentlemen, if you wish to ask a question, you may press star and 1. The next question is from the line of Samal Khotari from Samal Traders. Please go ahead. Mr. Samal, your line has been unmuted. Please go ahead with your question.
Hi, sir. Jai Shri Krishna. Sir, there's a project in Surjagarh, Gadchiroli, Surjagarh Ispat Private Limited. Will it benefit our plant or our mine in any case?
We hope that they will be our customers of iron ore out of the 9 million tons that we have to sell. So definitely that will be beneficial to the company.
Sir, any plans of taking stake in that company, sir?
No, we have no such plans at the moment.
Okay. And sir, one more thing. There is a mine, Bande mine, BANDE, Bande mine of sulfate iron ore. In that mine, Supreme Court case is going on. So, any plans that we are going to take that mine in future from Sunflag and Triveni is going to operate it because Triveni is the best in mining?
Triveni is one of the finest mining MDO operators, definitely, and that's why they're doing our mining. However, regarding the Bande mines, I have no idea and no knowledge of what is Sunflag's plans or Triveni's plans for that matter.
Okay. Thank you, sir.
Thank you. The next question is from the line of Pevin Chedda from Enam Holdings. Please go ahead.
Good afternoon, sir. Bhavin here. Sir, 2-3 questions. One, what was the mix of lumps and iron ore fines in this quarter versus quarter 4? Second is iron ore sales. What was the sales mix state-wise? Like entire sales happened in Maharashtra, or you sent to other states, and was there any exports and so? And the third question was, what was the blended FE of the iron ore you produced in the quarter? So these are my 3 questions.
The third question I couldn't understand.
What was the FE content, average FE content of the iron ore what we produced in the quarter?
Okay, third question is very easy. It's our blend is 63-64% totally for lumps and for fines. And other than the exports, which we have not done anything in this quarter. So 63-64 has been the FE content in this quarter. Number 2, the lump versus fine. Lump has been around 18-19% in this quarter. Last quarter was around 23-24?
No, somewhat higher, 75%.
25% was the lump versus 18% this year. And this quarter. And what was your third question, sir?
Entire iron ore was sold in Maharashtra, or you did sell out of Maharashtra?
We have a well-distributed policy. The lumps are sold mostly in Maharashtra to both blast furnaces and DRI units in Maharashtra. Fines are sold in Maharashtra, Raipur, Karnataka, sometimes to UP also, maybe not so much in this quarter. I think we did sell something to Jharkhand. So it goes in many states, and of course to Goa we have sold. Yeah.
And as you mentioned on the earlier part of the call that IBM approval is received, and I think you're awaiting EC approval, which is by January as you guided. Except for the EC, any other approval which you also be required for incremental iron ore volumes?
So when I say EC approval, it includes EC approval, and then we have to add the CTO, consent to operate, and then we are ready to go. So that's a process. That's part of the same process. Apart from the environmental clearances, there's no other clearances like forest or something is not required.
Forest is not required in this case?
No, yeah.
Okay. And the trial production of the BHQ plant, what you had started, that's running fine and all that?
Yes, absolutely. I clarified earlier, 66% regularly, 67% in trials, and around 30 to 40% yield from BHQ to finished product.
Yeah, thanks a lot. Thank you. Yeah.
Thank you. The next question is from the line of Rohan Koshi from New Horizon. Please go ahead.
Yeah, hi. Thanks for taking my question. Just wanted to expand a little bit on the comment you made on the benefit that you have of about 8,000 rupees a ton on steel, and how does that kind of sustain over time? And you said also 4,000 a ton on iron ore, right?
So there are two, post the 2015 MMDR Act, all mines which are more than 50 years had to go in for a compulsory auction, and most of the mines post 2030 will have gone for that. Last from 15 to 2024, 7-8 years, there have been around 140 million tons of capacity which has gone in for auction at an average premium of 120%. So I'm taking that as a premium of around 3,000 rupees that those mines have to pay. If we extrapolate that to the further auction that will happen, including major steel players that are still operating the older mines, that 120% translates to around 3,000 rupees on a very, very conservative basis of premium that they are paying over and above the royalty that I am paying, or that even they would need to pay. So that 3,000 rupees is one delta, and then we add to that the pipeline saving. Most of the steel plants are not attached to the mine. They're always, the pipeline network is not there in many of the plants or the mines for that matter. So the transport cost, if you add that further, that's around 1,000 rupees on an average is what I've estimated for all these mine stroke plant combinations. And I'm talking about the big steel plants. The smaller steel plants like they buy pellets on a commercial basis, etc. I'm not even including that in this discussion. So this 4,000 rupees delta that I have, steel requires around approximately 1.9 to 2 times of iron ore of the steel output. Iron is 1.6 to 1.65, and then iron to steel is around 1.1, 1.15, and then further losses. So I'm taking 2 times, 1.9 times. So that 4,000 rupees translates to 8,000 rupees.
Understood. And does that sustain over the life of the mine, or is there...
Contractually, yes. Contractually, yes. And when I talk about this beneficiation plant, sir, the beneficiation plant produces, like I said, 66% Fe content. That reduces the coke content of the coke requirement to the blast furnaces, or coal requirement in the DRI furnaces, or power requirement in the arc furnaces, whatever way you make the iron. In the net steel making, around 15 to 18% energy requirement either of coke or coal or power comes down, and that's again a delta which I have not yet calculated.
Understood. Okay. Thank you. Thanks.
Thank you. Ladies and gentlemen, that was the last question for today's conference call. I would now like to hand the conference over to the management for their closing comments.
Thank you, everybody. It was a nice session. Hope we have clarified and replied to all your queries and questions. Thank you very much.
On behalf of JM Financial, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.